Anjali Chang, this is Bloomberg Technology live from New York. Coming up, Google switches its search and shop playbook with less than 48 hours before the EU deadline. The tech giant faced an ultimatum to either level the playing field for rivals or risk fines worth 5% of revenue every day. We'll discuss the big decision. Plus, the massive data breach at Equifax forces an exit at the top of the C-suite. CEO Richard Smith is stepping down, and he's not walking away empty-handed. Details ahead. And Facebook scores an NFL touchdown. But is it playing catch-up with other big tech players already in the league? What this multi-year deal means for the social media giant's content strategy, coming up. Now to our lead. Google has taken a big step to comply with EU orders ahead of a deadline at the end of the week. The company will create a standalone unit for its shopping service and require it to bid against rivals for ads shown on the top of its search page. Bloomberg TV spoke with European Commissioner for Competition Margaret Vestager earlier this month and asked about Google's responsibility to make changes to the service.
It's not for us to approve. It is for Google to find a way to live up to the decision. And this is, of course, very important because if Google does not live up to the decision, then we will start investigating.
For more on the story, we're joined now by our Bloomberg Tech reporter, Mark Bergen, who covers Google. And with us here for the hour, our guest host, David Kirkpatrick, CEO of Techonomy. Great to have you both here in New York together. So, Mark, what do we know about how this is going to work?
Right, so Google's proposal, as we reported this morning in the EU, is to basically create a new division just in the EU that serves up their shopping ads to basically compete with every other comparative shopping service, right? So Google pulls from a bunch of e-commerce and retailers, and they post them on the top bar of the search results when you search for a product. And now they're effectively saying, okay, we're going to bid in our auction, our ads auction, just like everybody else.
So this means Amazon, for example, could be just as competitive as Google on its shopping results page, right?
Yeah, absolutely. I think that's been the response that Google has said to the EU. Initially, when this case has been years back, is like, listen, Amazon and eBay has much bigger market share in e-commerce than we do. And of course, a big concern that Google has is that Amazon's starting to take a lot more of its search dollars, both searching and then paid advertisers on search as well.
David, does this sound like something that would appease the EU?
Well, what strikes me is that it's kind of like we're entering into a battle of ideas between regulators and companies, and this is sort of the first shot across the bow because of that gigantic fine that Google got. But this kind of thing is going to be happening all over the world, not just for Google, but also for Amazon, Facebook, and particularly those three, but also probably Apple, Microsoft. And the fact is, I think it's very creative. I think it's a creative effort on Google's part. Whether it will appease the commission and the competitors that brought the complaint remains to be seen, but it shows they're really trying hard.
5% of global revenue is no joke. I mean, Mark, do we have any idea how much this new way will cost Google?
No, I mean, we know we have the rough estimates. There's an analyst report that came out that said in the product listing ads, the shopping category is about, in Europe, it's probably 5%. I imagine that's maybe even high. So it's not a huge hit, right? If for say, they wouldn't lose all of that, but say they lose some of that revenue, it's probably not, maybe not even going to show up in their quarter. But it's something that clearly it's been a growing category for them as more retailers are using it, and a lot of retailers are seeing pretty strong returns. So it is one of their best performing ad products.
So there's that record $2.8 billion fine, which, you made an interesting point, David, that the EU seems to be forcing change via fines, but, perhaps it might result in a creative solution.
Well, even though Google stock went up after this fine was announced, the fact is it's something you notice when you get fined $2.8 billion. And so clearly they are going to do their best to avoid things like that in the future. I think, though, in reality, none of these companies really quite know what to do any more than the regulators know what to do about them. And that's where it gets so interesting.
So, Mark, what are the next steps here?
Yeah, I think, from what we've been told, Google, there's two other cases the EU has. There's one about Android and its process of installing apps on Android devices, and there's one around display advertising. And from what we understand, Google is freaking out about Android. Like, this is a much bigger deal. They're putting a lot more legal emphasis on that.
Biggest mobile operating system in the world.
It's a big, and if you unbundle, right, that's all their services. That's YouTube, that's mobile advertising, that's Maps, that's Gmail, like all these products and they would have to start paying more traffic acquisition costs to the handset makers and the carriers, and that's been, last quarter we saw their earnings take a hit because their costs have been going up.
This issue of bundling is such an interesting one. Somebody was making the point to me recently that Amazon Prime is just like Microsoft putting Internet Explorer along with the browser. There's basically reducing costs for the consumer and making it more convenient at the cost of other competitors. And effectively, Google with Android does the same thing. You know, Google with shopping in its search bar does the same thing. So, wow. But really, do we? I mean, look, I am as scared of these companies as anybody, but I also know people love the way they work. We don't want to see them impaired and become less useful. And that's where the balancing act is so tough.
It's certainly a delicate balance. I mean, Executive Chairman Eric Schmidt has been to Europe to try and talk to them. Sundar Pichai has been to Europe. The negotiating doesn't seem to have worked at all.
Yeah, they had a kind of a charm offensive, right? They're having these publisher agreements in Europe, and they've talked to like publishers like Axel Springer, that was once a very big foe. From what we understand, a lot of the telcos in Europe that were aggressive in this case have kind of gone quiet, and maybe the Google. I mean, Google in general under Pichai has tried to be much more horizontal and like look at partnerships. They're aware that they are the 800-pound gorilla in the room often. They're aware of their size. That being said, I think they're also nervous. You know, I'm out here for Advertising Week, which is a big show, and the first thing that a lot of the advertising folks are telling me is Amazon. Like Amazon, you know, it's Google and Facebook are taking all the money, but you know, one place that we're getting all of our clients are saying, what's our Amazon strategy?
Amazon is the threat.
Right, Amazon as an advertising platform, because they have tons of consumer data, they have a lot of reach, they have basically everything that an advertiser wants. Amazon's moving a bit slowly in that world. They haven't kind of flipped the switch, so to speak, but they are probably the biggest threat to Google and Facebook right now.
Yet another iron in the fire that Amazon may have, as there are many. Okay, Mark Bergen, who covers Google for Bloomberg Technology, thanks so much. David Kirkpatrick, CEO of Techonomy, you are sticking with me. All right, well, Uber is suffering yet another legal blow in the United Kingdom. A female driver is suing the ride-sharing giant for sexual discrimination, claiming the company's practices unfairly disadvantage women. The suit, being brought by the GMB trade union on behalf of the woman, claims that the company fails to provide sufficient security to female drivers. More specifically, the suit says that a driver doesn't know the destination until the passenger is already in the car and then has no ability to cancel the trip. Uber said its app offered protections to drivers and didn't require them to take trips that they don't want to. This comes days after the City of London revoked Uber's license to operate there. Coming up, after helming the company at the center of one of the worst cyber attacks in history, the CEO of Equifax is stepping down. Details on that next. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Venture firm IVP says it raised a new $1.5 billion fund just 2 years after it closed its last one. The firm said it likely won't start investing from the new fund, called IVP 15, until next year because it still has plenty of cash left in its last fund. IVP plans to stick with its strategy of investing about $10 to $100 million in each company it decides to invest in. Well, Equifax's CEO is resigning nearly 3 weeks after the company exposed the private financial data of 143 million Americans in a hack attack. Richard Smith will be replaced on an interim basis by Paulino Dorrego Barros Jr., a 7-year Equifax employee. Since the hack, Equifax stock has plunged as much as 34%. And according to Bloomberg Gadfly, Smith will likely leave with a $7.6 million bonus. That is on top of the $52 million he'll walk away with in stock and other retirement benefits that he accrued as part of his nearly 12-year run as CEO. Smith will still testify before Congress next week. Joining me now to discuss, Nate Fick, the CEO of Endgame, a private cybersecurity firm. So the CEO's resignation, Nate, is that just, did this have to happen?
Emily, I like to think back to a message that Dwight Eisenhower had in his pocket during the D-Day landings. And it was a message he was going to deliver if the invasion failed. And the last sentence says, if any blame or fault attaches to the attempt, it's mine alone. It's not about fault, it's not about blame here, it is about responsibility. And CEOs and boards have to be responsible for data breaches. So yes, Richard Smith had to go.
There's still questions about the timeline here and what they knew when. You have senators calling this a travesty, some saying that this resignation is not enough, certainly not enough. Our data is still out there for everyone to see. You know, how do we prevent something like this in the future?
It takes a layered approach, Emily, and unfortunately, we live in an era now of mass targeted attacks where nation-state level resources are being directed against companies. We will see more of this. We need companies to start treating the threat differently. We need the government to make sure that deterrence extends into the cyber domain, and we need corporate accountability.
What can government do to force companies to be more vigilant?
So I think we need to see a change in culture, a change in expectation. It's not okay to simply allow a CEO to retire and take home a golden parachute after the sort of breach that leaves close to 150 Americans vulnerable. I think we need to see much greater accountability, and the expectation has to be set that if by oversight, or even if you're doing everything right, the responsibility stops with the CEO, it stops on his or her desk. And we're going to begin to see corporate behavior change and corporate culture change only if there's that expectation of accountability.
Now, your firm counts the Air Force as a client, and in some ways you say that the government is ahead of the private sector when it comes to security and security technology. I mean, of course, the government itself has suffered its own hack attacks, the Office of Personnel Management a couple of years ago. How would you say, though, that the government is actually doing this better than the private sector?
The government's not a monolithic entity, let's remember. So I think the intelligence community and the Defense Department are right at the cutting edge of cybersecurity. They are at the cutting edge of developing defensive methodology. They're at the cutting edge of product development and product deployment. And I put them in a different category than other parts of the government. But all of us, including parts of the economy like Wall Street banks, can learn a lot from the NSA. We can learn a lot from the Air Force. And there's a reason why we see talent from places like the NSA and the Air Force being hired onto those commercial security teams. So working with places like the Air Force is a great validator for a company like Endgame and our product.
Deloitte also revealing that it suffered a hack attack. It says that very few clients were impacted, but yet again, it just seems like one of these things is happening every week. You say that this was an unsophisticated attack. What can you tell us about it?
So there's an old joke that the difference between email and true love is that email lasts forever. And anyone at this point in time who's having sensitive customer data compromised in an email attack, frankly, should have learned the lesson a long time ago. Just because an attack has significant ramifications doesn't mean that it was a sophisticated attack. And I think there's a through line connecting the Deloitte attack, the Equifax attack, the SEC attack, and that is that we're going to see a lot more of these. This is the new normal, and we need to change our policy and our security procedures to account for it.
The SEC, as you mentioned, suffered a hack of its online database. You know, I guess I wonder, what can be done to prevent this? I mean, and why does it seem that companies are so far behind, or that this isn't priority number one?
Companies are far behind because they're facing nation-state adversaries. We live in this world of mass targeted attacks where cyber offense capabilities that were developed with the resources and expertise of nation states are now in the wild, so to speak, and they're being used against companies. So there's a huge asymmetry here. And we need our government to begin doing what only it can do, which is make sure that deterrence extends into the cyber domain. Since the end of the Second World War, we've amassed a lot of American military, diplomatic, and economic power, but all of that power right now stops at the keyboard. It's not deterring our adversaries in the cyber world, and that has to stop.
All right, Nate Fick, CEO of Endgame, thank you so much for stopping by. All right, coming up, Facebook has partnered with the NFL for content that other tech giants already have. So is the social network too late to the game? We'll discuss next. This is Bloomberg. A story we are watching: Facebook will be shut down in Russia next year if it fails to comply with requirements to store user data locally. That's according to the head of Russia's state communications watchdog. President Vladimir Putin signed a law in 2014 that requires global internet firms to store personal data of Russian clients on local servers. Companies ranging from Alphabet's Google to Alibaba have complied, while others like Twitter demanded extra time to evaluate the economic feasibility of doing so. In November, Russia blocked access to LinkedIn, citing non-compliance with this law on personal data storage. Sticking with Facebook, the social network has acquired the rights to host highlights from the National Football League, which is searching for new ways to reach fans as fewer viewers tune into live games. However, it seems like a game of catch-up for the tech giant. Other competitors, Snapchat, Amazon, Twitter, and Google, already host video footage from the NFL. So is Facebook late to the game, and will the social network become the video content provider it intends to be? Joining us now from LA, Bloomberg's Lucas Shaw, and still with us, Techonomy CEO and our guest host for the hour, David Kirkpatrick. David, what do you make of this move?
Well, you know, it continues to strike me as somebody who's been hanging around at Facebook since about 2008.
David wrote the book on Facebook.
Thank you, Emily.
In case we haven't said that
They used to always say, we are just a neutral platform, right, for content created by others. And now, you know, what it does suggest to me maybe is that user behavior, the normal tweeting and Facebooking about our families and, you know, brushing our teeth, the notorious kind of things that used to characterize, maybe that is happening less. Maybe they really have to boost traffic with traditional means, and maybe then they are really slowly becoming a regular media company.
Lucas, why would Facebook do this if others already have the rights to these clips? I mean, what's really in it for them?
Because there's no programming more valuable in the United States than the NFL. You know, they tried to get those Thursday Night Football rights. They were one of the bidders this year. They lost out to Amazon. This is kind of like a consolation prize, but still, if you're Facebook and you want to tell all your users that you have this new video section and watch, and that it's not a bunch of your friends posting or your uncle sharing a photo, it's actually good video that you need to see, getting highlights from the NFL is one way to try to bring them in, and it's also one way to signal to advertisers that what you're offering is really high quality and not maybe a cat video.
That said, David, I mean, viewership is down when it comes to the live games.
But, you know, there is an interesting aspect of Facebook's targetability is so impressive when it comes to advertising, but when they get very specific kinds of content, they can also target that to people, which really will be a service to the user. You know, if you're an interested fan of one team only when it plays another team, you know, with the Yankees and the Red Sox being a classic example, you know, that's the only time I watch the Yankees. But, you know, I would want Facebook to tell me that, and that's good.
Lucas, give us a progress update on Facebook's broader video plans, their original content plans. You know, obviously there are other players in this race as well, but Facebook has, you know, its own unique approach.
Yeah, very early days right now. They just rolled out Watch a couple of weeks ago. They've had some original series appear, like one with the Ball family, Lonzo Ball, the basketball player. But we haven't seen a really big push on their part yet to promote the original series. The story that actually caught my attention the most was that Facebook bid $600 million for the streaming rights to cricket matches out of India. You know, they were bidding against the likes of Fox and Sony for that one, and they put up more money than I've seen them bid for anything thus far, which suggests to me that, you know, sports rights are expensive. Highlights are one thing, you have to spend tens of millions, maybe a couple $100 million on that one. But if you're bidding for first-run sports rights against some of the biggest media companies in the world, that's a sign that you see high-quality programming as marketing, but expensive marketing.
They're willing to pay up here. David, I have to ask you this, as Facebook is embroiled in a completely separate scandal dealing with the ads that were bought by, you know, parties in Russia. Now we know that President Obama actually implored Zuckerberg himself about the danger of fake news. This is something that Zuck told you was a crazy idea, that Facebook could possibly influence the election.
Yeah, he said that.
I'm so curious
the
what your
day
take
after
is.
the election,
Yes.
He said it was a crazy idea that fake news could have affected the outcome. But let's face it, if the president pulls you aside, you know, 2 weeks later and says, you know what? Think again, that's going to get your attention. And he has done a complete 180 on this in the interim, so, which I credit him a lot for. He, you know, the things that he said last week were very dramatic changes from his attitude, you know, in the past. And, you know, the president the past president must have had a big impact on that.
Well, you know, this Washington Post story that detailed this encounter between the president and Mark Zuckerberg went into great detail about how, you know, back in June of 2016 is when Facebook first noticed that this could have been happening. You wonder why wasn't anything done sooner?
Well, you know, a lot of things happen on Facebook. That's the problem. You know, when you have 2 billion users doing 2 billion people's worth of things every day, it's hard to know everything that happens. I mean, they probably let down their guard, there's no question, and they have now said they're going to raise their guard. They're hiring tons of new people and taking a lot of gestures. I don't know whether it's going to be enough. I don't know whether you can really have enough people and even enough software to prevent bad stuff from happening among 2 billion users who are connected to the rest of the world in your system. But they're trying, and he has changed his attitude a lot.
All right, David Kirkpatrick, our guest host for the hour. You're sticking with me. Lucas Shaw, our Bloomberg tech reporter in Hollywood. Happy birthday, Lucas. I hear it's a celebration for you today, so enjoy. Coming up, Twitter is experimenting with one of the biggest product changes yet, expanding the character limit on tweets. Finally, we'll discuss why this might be key to getting more users. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. From New York, this is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of first word news. Senate Republicans insist they won't give up on repealing and replacing the Affordable Care Law, even as they abandon plans for a vote this week. Senator Lindsey Graham, co-sponsor of the latest GOP bill, told reporters the effort to repeal Obamacare will likely be taken up again for fiscal year 2019. Republican Senator Bob Corker of Tennessee won't seek re-election. The chairman of the Senate Foreign Relations Committee, whose congressional plans had been unknown, announced today that after discussions with his family, he'll leave when his term expires at the end of 2018. Top congressional leaders are promising aid for hurricane-devastated Puerto Rico.
I want the people of Puerto Rico to know that we are in this with them. Right now, this is a rescue mission. And I also want the people of Puerto Rico to know that they're going to get the kind of support and the aid that Texas and Florida have been enjoyed. The bill we passed out of here a couple weeks ago for FEMA equally applies to Puerto Rico.
Federal prosecutors unveil criminal charges against university coaches, financial advisors, and representatives for sportswear companies accused of manipulating young athletes and steering NBA-destined college stars towards certain sports agents and managers. Saudi Arabia has announced that women will be allowed to drive for the first time in the kingdom's history, effective next summer. It was the only country in the world to bar women from driving. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. It's just after 5:30 p.m. here in New York, 7:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, U.S. markets were modestly higher, so we have Nikkei futures just modestly higher as well on a day when the market is awaiting Japanese machine tool orders for the month of August. ASX futures are looking reasonably bright as well, up by 0.25%. Iron ore also recovered overnight, up 3% to near $65 a tonne now, although Goldman Sachs has issued a note saying that it expects iron ore to decline further to around $60 per tonne at the end of the year as China continues to curb pollution. BHP also expecting a flight to quality to boost demand for high-quality iron ore that pollutes less. The Aussie dollar has also sunk below 79 US cents, and we're waiting on China August industrial profits. And it's a day of a lot of action from Fed speakers as well. Neil Kashkari, James Bullard and Eric Rosengren all talking. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
The This is Bloomberg Technology. I'm Emily Chang, live from New York. In a bid to expand its sluggish user base, Twitter is testing out a big product change. It has to do with its famous 140-character limit. In a statement, the company explained, "We want every person around the world to easily express themselves on Twitter, so we're doing something new. We're going to try out a longer limit, 280 characters." We're now joined by our Bloomberg Tech reporter, Selena Wang, who covers Twitter, and still with me here in New York, Techonomy CEO David Kirkpatrick. So, Selena, a limited test with a small number of users, but how is this going to work?
So with a small percentage of users globally, they're going to let them use up to 280 characters. That's twice as much as the current 140 characters that's allowed. Now, this is a big deal. A lot of heavy Twitter users see the 140 character limit as the defining characteristic of the platform. I've been monitoring Twitter very closely. There are already a lot of backlash, a lot of emotional response to this change of people saying that this kind of may have an impact on the brevity, the concise nature of the platform. But at the same time, Twitter faces this problem where they simply are not growing users, and by making it easier to send tweets where you don't have to think about condensing it to exactly 140 characters, they're hoping that more people will come back to the platform day after day.
David, the idea of lengthening tweets has long been bandied about. Another way to look at it, though, is 140 more characters for President Trump.
Yeah, well, I think of Mark Andreessen inventing the tweet storm, because you didn't have enough space to really say something, in some detail. I think it's a good move. There's virtues in concision, and obviously the power users, the, real insiders who think they helped create Twitter are going to be disappointed. But if they want to be a mass service and grow considerably beyond where they are today, they have to keep making it easier to use. And this is a step in that direction.
Right. And Selena, just remind us about user growth and ad revenue. Both are struggling.
Yes, exactly. They're having trouble gaining advertising revenue. Also, the monthly active users were stagnant over the past few quarters, and that's a huge red flag to investors who are hoping that an uptick in MAU would show that there is a long-term sustainable path for this company going forward. You made a good point earlier. This is going to allow Donald Trump to now have twice as much room to give his tweets. Now, Donald Trump has been a good boost to Twitter's usage, but it hasn't been enough to really move that MAU number up even after the election.
I wonder what doubling the number of characters will really do. I mean, is it really that significant a change, David?
Well, I know that there are many times when I find it isn't enough space. Yeah. So for me, I think it's double that space really would be enough to say something in English. But it's still enough to have a real sentence or two. So I think it's a good move. I really do think it will make it easier.
So what else, though, does Twitter need to do? I mean, is this the silver bullet?
I think so many of us have been flummoxed trying to figure out what Twitter should do. It's the weirdest situation, the best known company, the best known product that can't really seem to become a commercial success in a big way. It's clearly not going to go away. There have been many companies that have been said to be interested in buying it, Disney, Salesforce, among others, and I think that's possible. Something like that could make sense. I would hope it's almost like a global or national treasure, both global and national. We can't let it go away. The president's use is just emblematic of the fact that pretty much every political leader uses it to make their public statements. It's critical in a crisis like a hurricane or a flood. We've got to somehow find a way. Maybe they should start charging us. I don't know.
The people who love Twitter do love Twitter, Selena. What do we know about how long the test will last and when the company might make an actual decision on whether this is permanent?
We don't know all of the details yet. I expect that'll probably last several weeks, and if the initial results go well, they'll probably roll it out to all of the other users. I think an interesting point, though, is when I spoke to the company, they are doing this test based on previous research they had found. Now, an interesting detail about this test is that it is excluding certain languages, including Japanese and Chinese, because those are languages where they found that you can express a lot more in a lot fewer characters. So they had this interesting data point that almost 10% of tweets in English reach that 140 character maximum, while only about 0.4% of tweets in Japanese reach that maximum point. So they're seeing that in certain languages it's much easier to tweet much lengthier conversations, and they're hoping that it'll be the same thing in English too.
All right, will be interesting to see how it plays out. Bloomberg's Selena Wang in San Francisco, Techonomy's David Kirkpatrick with me here in New York. Well, Mike Novogratz used to be one of the best-known fund managers on Wall Street. Now, he is reinventing himself as the king of Bitcoin. Novogratz is starting a $500 million cryptocurrency hedge fund in a comeback to professional money management. He sat down with our Bloomberg editor-at-large, Eric Schatzker, and discussed why Bitcoin is appealing to macro traders.
In a lot of ways, this is a market like any other market, and you see the psychology of fear and greed and in the charts the same way you'd see them in the charts of the Indonesian rupiah or dollar yen or treasuries. They're exaggerated because of less liquidity and because you can't get short. There's not a real good way to short, and so when they fall, Jamie Dimon makes a comment. China bans the exchanges. The trend line breaks. They fall a lot farther than they would have in other markets because there's just not a short base to cover, and so you go into you reach a new level of support and kind of rebuild your base.
How do you know when to buy and sell? How do you trade this thing?
You know, there are multiple ways to trade. One is it's just macro. And so I trade the ballet of the charts, the ballet of the prices. I always tell people I need a story and a chart. And there's a lot of information. And so part of it is event driven and access to information. So one of the things I keep trying to do is put myself in the center of the ecosystem. It's when you're center of the ecosystem and it's still a relatively small world, you know what's happening. And so when the Ethereum Alliance got announced, it was well telegraphed that it was going to get announced. You talk to people, you knew it was going to get announced, and then it gets announced and the price goes way, way up. And so I would call that an event-driven trade. The broad trading of it is macro, though. You'll see mini zeniths and euphorias, and so I sold at 5,000 or 49.80. I actually sold some Bitcoin, and then, you know, 3 weeks later, you're trying to buy it in the low 3,000s. And, you know, listen, if you're good at that and you're a trading junkie, it's a lot of fun. It does increase your tax bill. And so for some people to just sit, that's a different strategy.
You're trading what, Bitcoin?
We trade
Ether? Jesus coin?
Not in Jesus coin. I've taken the approach to participate in all sides of the ecosystem. So I have mines, investments in mining.
To create new coins?
To create new coins. You know, that's been an interesting business. It's been a money loser for us in local currency terms, right? I spent Bitcoins to buy a Bitcoin mine. If I had spent dollars to buy a Bitcoin mine, I would have made a lot of money. But you were better off just owning the Bitcoins. And in Ether, you were far better off just owning the Ether than building Ether mine.
Where are you trading? What platforms?
So, you know, we're fairly large, and so we trade at lots of different exchanges. And one of the tricks or the risks in this business right now is the riskiest money you have in the system is being left on the exchanges, because
there's no central clearing there.
And they're not that well capitalized, and so you don't leave that much money on the exchanges. And so we trade in lots of them. You know, Gemini here in New York, the Cameron and Tyler's exchange is one of our go-to places, because that got regulated. You feel a little bit better about it. And, you know, I know those guys, so if something really bad happened, I go down and give them a shot.
Galaxy Investment Partners founder Mike Novogratz there. Coming up, the competition in live streaming heating up. The latest company to join the block, Vimeo. We will talk to the CEO about its newest features next. This is Bloomberg. Dyson, best known as a manufacturer of vacuum cleaners, will build an electric car by 2020. Founder James Dyson said Tuesday that the company is investing over $1.3 billion to develop the car, plus the same amount to create solid-state batteries to power it. Dyson said his electric car would be, quote, radically different than those being designed by other car makers, including Tesla. Well, there's a new player in the live streaming market. Vimeo has added live streaming tools to its video platform for the first time with the launch of Vimeo Live. Customers will be able to stream live and videos will automatically be archived. However, the feature will come at a cost, $75 a month. In addition to launching the live streaming feature, the company has agreed to acquire Livestream, a live video technology company. Joining us now, Anjali Sood, Vimeo CEO, and still with us, Techonomy CEO and our guest host for the hour, David Kirkpatrick. So, Anjali, how exactly will this work?
Yeah, so today Vimeo is announcing the launch of Vimeo Live. This allows any professional or business, really anyone who is broadcasting an event, to be able to use Vimeo's technology and player to do that. And so they'll be able to live stream using our player. They'll be able to embed their live streams on their websites, on their apps, anywhere they want. They'll be able to get analytics back on how their live streams are doing. And then they'll be able to take their videos, their recorded videos, and host them on Vimeo and do all the things that professionals do on Vimeo today. Share, monetize, get stats back.
Why would somebody want to use your platform instead of, say, Facebook Live?
For free. So
For free,
I think
yeah.
Facebook Live, those are great solutions for consumers who are broadcasting on their phones to a single platform. But what we've heard loud and clear from Vimeo's creator base, for them, this was the #1 feature request for the year, was live streaming, is that they're looking for a professional level solution. And what that means is not only professional level quality, but they want to be able to broadcast everywhere, simultaneously broadcast to Facebook Live, YouTube Live, embed on their websites, embed on apps. And so that's the offering that we're going to be bringing, and that's it's very consistent with Vimeo's focus on quality and a professional level solution.
It is just the kind of thing my conference company could use, by the way. So I understand the language she's speaking.
We'll see Techonomy on Vimeo, perhaps.
I hope so.
Well, we've been using live stream, actually, so there you go.
There you go.
It's interesting because earlier in the show we were talking about Facebook buying, rights to NFL footage, and I'm curious how you see this fitting into the broader live streaming battle.
Yeah, so I think there's absolutely a battle around content, but at Vimeo we're not investing in owning content ourselves. We're investing in empowering others to create content and to distribute that anywhere. And so for us, it's really about providing the tools for others. And so I think that as the battle set kind of continues, that's sort of a good thing for creators. It allows more creators to put content out there.
So you don't really see yourself competing with Facebook per se, really?
No, and in fact, what I would say is, what we're really interested in doing is help creators succeed on and off Vimeo, and part of that is on Facebook. And so we're actually building tools to enable distribution everywhere.
And what about YouTube?
Same with YouTube. We want to enable distribution to Facebook, to YouTube, to Amazon, anywhere. And this is a slightly different strategy than Vimeo has taken in the past. But it's an important one for us because when we look at the market, we feel like there are a lot of players battling for audience attention and eyeballs, but there isn't really an independent home for creators where their content can start and then where it can be put out into the world. And we think that's a place where Vimeo can differentiate.
How will the live stream integration work?
So we're going to be immediately following the close of the acquisition, integrating the best of live stream's features into Vimeo Live. And not only that, but Livestream has a suite of products and services to help live streaming. So they offer a live event camera, editing software to edit your events in real time, as well as event production services. And so we'll be able to bring all of that to our creator community.
And just to clarify, why buy Livestream if you don't want your own content?
So we're buying Livestream because they are best-in-class innovators in the world of live streaming. They've been at this for 10 years. And as I said, they've not only solved the problem of streaming, but also just how to set up an event, how to capture an event. And what we're trying to do is really build this end-to-end workflow for creators. And so being able to leverage Livestream's expertise and institutional knowledge in this area is really important for us, and it allows us to not only provide that end-to-end workflow for live streaming, but for all aspects of video.
Fascinating. All right, Anjali Sood, Vimeo CEO, thank you so much for joining us today. All right, David, are you sticking with me? I'm saying goodbye. David, thank you so much for joining us. Always great to have you and good to see you in person.
Yes, thank you for coming here.
Coming up, Alibaba is getting deeper into its delivery business, but the company is taking control of the SEC probe. That is next. This is Bloomberg. China's most popular Netflix-style streaming service is said to be seeking an IPO of at least $8 billion. iQIYI, which is controlled by search giant Baidu, is targeting a U.S. initial public offering as soon as 2018. Parent company Baidu still wants to retain control post-IPO, this according to people familiar with the situation. iQIYI, the only Chinese service that licenses shows from Netflix, is competing with platforms run by Alibaba and Tencent. Well, Alibaba is taking control of an unprofitable delivery business for $800 million. China's largest web marketplace agreed to increase its stake in Cainiao Smart Logistics Network to 51%. Alibaba will consolidate the financials under its own books. It is also committing another $15 billion over the next 5 years to further expand the network. Back in May of last year, the SEC began probing why this company wasn't consolidated into Alibaba's accounts. At the time, Alibaba owned 47% of it. So for more, I want to get straight to Hong Kong, where Bloomberg's chief North Asia correspondent Stephen Engel is standing by. Stephen, what's happening here? Make sense of this for us.
Yeah, I mean, keep in mind, Alibaba has grown so big, and the sheer percentage of e-commerce in China, they have their last mile issues and procurement and delivery. And of course, Alibaba hasn't owned those delivery companies and logistic companies outright. They have more than a dozen partners throughout China, including this one, Cainiao. They had 47% stake. They've now increased that to 51%. So it's a controlling stake. They're going to get one more seat on the board. They're going to fold the financials as well into Alibaba. And you were rightfully said about the SEC probe, and that was one of the biggest issues with the accounting allegations. It's not fraud allegations. There were some bookkeeping issues that the likes of Jim Chanos and others, of course, in the SEC has also wanted to know about folding this in. They have this equity method that they use where they just count on their books their percentage of their ownership, and then they offset that with investment gains that they got from their valuation of Cainiao through its latest funding round. So it was a bit murky. I won't get into the wonkiness of the equity method of accounting, but this could perhaps circumvent that SEC probe.
What does it mean when it comes to the bigger picture of their plans to scale globally and build out the logistics part of the Alibaba operation?
Yeah, it's very interesting because actually when I was in Hangzhou talking with the CEO, with the vice chairman, and also, of course, with Chairman Jack Ma, we talked a lot. A big percentage of the hour-long interview was about logistics and about data and about going to a more asset-heavy model because he's always said, we're not Amazon. We don't have our big warehouses. We are a platform for others to do shopping. We don't own inventory. But you know what? They are moving into that. And in fact, on September 9th, this is what Jack Ma had to say when we talked directly about their logistics mission, if you will.
For today's Alibaba size, you should not leave the heavy model to the others. If something, you have to do it because the infrastructure building up, you have to invest.
And, of course, on November 11th, we're coming up to Singles Day and the big volume of in the shopping extravaganza. Daniel Zhang told me they are now handling about 55 million packages a day on the Alibaba platforms. The goal and the target, the realistic goal, he says, is 1 billion packages a day on the various Alibaba platforms over the next few years.
All right, Stephen, we've got just 30 seconds or so left. What's your take on the potential $8 billion valuation for iQIYI?
Well, iQIYI, that's Baidu, of course, the back companies, Baidu, Alibaba, Tencent, they're all investing heavily. They call this the Netflix of China. Well, it's a bit of a misnomer. It's not, it is having revenue, but it's not profitable by any stretch of the means because they are investing heavily in content. There's a race for content in China by the big bat companies. And again, it's losing money hand over fist to get eyeballs and clicks. And until it can turn that around, it's going to be a long struggle.
All right, Stephen Engel with us from Hong Kong, our chief North Asia correspondent. Stephen, always great to have you. That does it for this edition of Bloomberg Technology from New York. A reminder, we are, of course, live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.